Hello traders, today is the 23rd of May. My name is FOMC Markets and YouTrading, and today I'll be looking at the week ahead. Okay, London session started with the euro stronger, US dollar a lot weaker. If we look down, we've also got a New Zealand stronger this morning, as well as the Australian dollar. Japanese yen is weaker. So if you were to be trading this morning, you kind of want to be looking for a long New Zealand dollar, short US dollar, or maybe a long euro versus a short US dollar. And we'll go into reasons why that might be happening when we look at the economic calendar. But as you can see, bottom left-hand corner, top right-hand corner aren't really showing a risk on, risk off. So today it's kind of mixed, but if you're going to trade anything, maybe trade strength against weakness. Right, going to the economic calendar, looking through just briefly between the 23rd and 27th of May, you can see there are actually quite a few data points which could move the markets. Starting with today, we've got the UK Bank of England Governor Bailey speaking, due to participate in a panel discussion titled Monetary Policy, Policy Interaction and Inflation in a Post-Pandemic World. We do also have the World Economic Forum. They're hosting lots of speakers this week. So when we get these central bankers speaking, we can expect to see some headline risks come from there. Tomorrow, though, we get flash PMIs. Flash means that it's the sort of preliminary data. It's the first readings of these PMIs before they get adjusted as the month goes on. We are expecting to see basically all these PMIs come in worse than expected, also worse than the previous reading. If they do come in worse than expected, then that will be detrimental to each of the currencies associated. So if we get a worse than expected German flash PMI, I'd expect this euro to find some resistance and come lower. Same for the pound and US dollar. All right, Tuesday, towards the end of the day, we get Fed Chair Powell speaking, and then we get ECB President Lagarde speaking. Now, ECB President Lagarde will be speaking a couple of times this week at the World Economic Forum at Davos. So I'd imagine we'll get some euro movement there. Then in the overnight session on Wednesday, the RBNZ, they're going to release their official cash rate. We're expecting them to raise by 50 basis points, a bit like the FOMC, looking to see if we can get the cash rate up to 2%. That's probably why we're seeing strength in the Kiwi today. So I expect to see that happen the next couple of sessions. Then again, more central bank speakers, and this time we've also got Bank of Japan Governor Kuroda speaking. So I'd expect to see them reiterating that they're going to keep monetary policy very loose. Then we've got US durable goods, the core and durable goods orders for month on month. 0.6% is due to come in worse than the previous reading. If we get even worse than that, then that will be detrimental to the US dollar. Then for me, the pivot this week, other than maybe some headline risk through the flash PMIs and the central bankers speaking, I think the market will essentially be waiting for the FOMC meeting minutes, get a little bit more color on what the FOMC are thinking for the rest of this year. Obviously, Fed Chair Powell's spoken and said that he expects to see 2 more rate hikes of 50 basis points over the next couple of meetings. But here we get to see what the rest of the committee are thinking too, or what they were discussing between themselves. Then on Thursday, things slow down in Europe. We get bank holidays in Switzerland, France and Germany, before we get Canadian retail sales, and then the US preliminary GDP quarter on quarter. Now, some analysts are saying that the US is probably in recession already. So obviously, if we get a negative number like is expected again, then that will sort of add fuel to that. Then we've also got the weekly unemployment claims and then pending home sales. So US dollar could move on the back of the open on Thursday. However, it will probably come back into a range before Friday because we've got core PCE. That is the Fed's preferred inflation metric. Obviously, we've got CPI and PPI, and the Fed look at that. But this is the one that they state that they look at the most when sort of considering how well they're doing against inflation. And then to end the week, we've got revised University of Michigan consumer sentiment. Obviously, consumer sentiment across the world has been decreasing. So if we get a bad core PCE, in terms of if it goes higher than expected, then we could see the US dollar, affected by that. And then, maybe the consumer sentiment is not as important. But if PCE comes in expected and then we get a worse than expected consumer sentiment, then I'd expect the dollar to come down on the back of that. Going to the active trader platform, dollar versus the yen, obviously being one of the sort of main currency pairs that have done well this year. March was the sort of springboard, if you like, for this big explosive move to the upside. We got up to 131, and now we found resistance. Just looking now to see if the dollar decreases enough today to actually come back below market structure from the 26th of April. If that does, and we're looking to the left, looking for balance areas, we're looking for rising dynamic support from this moving average. Obviously, we could have come down to 120, but if we look left a bit further, we did trade a lot between 112 to 115, so we could come back into the middle of that range later on this year. Going to the actual dollar index, the dollar has now breached the swing low from the 5th of May, 4th of May. So that was the FOMC day on the 4th of May, Bank of England on the 5th of May. We made a swing low there. Essentially, we've come back below that now. I'm now expecting to see a retest of that level at some point before push lower back into some of these bigger ranges, maybe just below 100. This is helping obviously the other commodity pairs. So we've got things like gold also going higher today because we've got a weaker US dollar. And the US dollar is also being affected by the euro. So if we just look at the euro versus US dollar, you can see we've broken above that swing high from the FOMC Bank of England sort of period around the 4th and 5th of May. Looking to see if we can get back up to 1.08. If we can get back above there and sort of find support where it was resistance, then we've got this dynamic resistance coming down by the 200 period moving average around to, probably going to rest around 1.11 before, or depending if we go sideways, obviously, but it could come down towards 1.1, and then if we meet price action and this resistance along with this balance area here, then maybe that's where we stall out. Pound US dollar, similar sort of situation. Haven't quite made it above the FOMC, Fed, and the Bank of England sort of data points. That swing high here from that period of time still need to be breached, but the pound, as you can see, is making a good run. It looks like we're going to take out the 1.26 at some point soon, and then it's just a short distance to the swing high here. And if you look to the left, big impulsive move to the downside, not a lot of volume, so probably going to make our way up to 1.3 at some point, which suggests that that's going to be further downside in the US dollar as well in the index. Dollar CAD, as the dollar weakens, then that supports energy prices, and we're seeing dollar CAD come down lower. We've obviously been trading in this range from the 4th of May for quite a few days now, sort of dipping into it. Looks like we're going to come back through there now, hit the 200 period moving average, see if that acts as support. If not, then we're looking to this big red candle here from the 20th of April, see if that has enough buyers left there like they were back here from the 20th of April. If the buyers are still there, then we come back up. Otherwise, we've got maybe these swing lows here, market structure, all the way down to the 21st of October and the 1.222. The benchmark index last Friday dipped below the double bottom from the 12th of May and 19th of May. So 20th of May dipped below, took out the liquidity below that, closed essentially where we started the day. But today we're looking to see if we can actually get higher. So the high here is 3957. The high from Friday was 3951. So we've made a new high. Just looking now to see if we can get up to the 4004. Obviously come FOMC meeting minutes on Wednesday. If they come out with some new information and we're not above this 4,000 level, then that could act as resistance. Same with the PCE, but I am expecting to see essentially a break above 4,098 and then come and hopefully test this double top, where it's even more than a double top now, is several equal highs up here where I think there's going to be a lot of liquidity. So above 4,301 would be ideal. And then if we can get that sort of taken, see if it acts as support and retest before making higher highs. Otherwise, we are coming down a lot lower, and that's just not very good for anybody. One thing that might drag us down is the Nasdaq. If we look to the left, sentiment indicator on active trader platforms says 76% of traders are trying to go long this. We did take out the liquidity, like I said, from last week, so 12th of May, 19th of May, similar sort of thing, double bottom. We took out liquidity on the 20th, didn't close green, didn't really close near the sort of open. We haven't made a new high today, so the fact that there is quite a lot of bullish sentiment in the Nasdaq and there's still high inflation, then I think this is one reason why we could come lower in the Nasdaq, and that could actually drag down the S&P 500. So obviously S&P 500, if that moves higher, then that can drag Nasdaq down, those sort of indices higher. But we need to see quite a lot of bullish momentum there, and a change in the sort of narrative that we're seeing in the financial media. Obviously, if Brent and WTI were to break out of their sort of channel, if they were to come lower, then that would help inflation. And we'd actually see PPI, CPI, and PCE come lower. That would help the sort of beta stocks in like the Nasdaq and the S&P 500 actually have a better outlook for the future. At the moment, though, this lower dollar is keeping energy prices supported. So it does look like we're actually going to come up, test $116 per barrel again in Brent. But we're waiting to see what happens in the future in terms of supply and demand in there. This morning, with the RBNZ likely to raise rates by 50 basis points to take them up to 2%, it does look like the NZD USD is the easiest long trade to take, looking like we're going to come up and test the 0.655. If we look to the left, back in January, beginning of the year, that acted as a support level. Then it acted as resistance, 4th of May, 5th of May. So if we get back above there, I think the Kiwi goes a lot higher, up towards the 0.68. And sort of retraces a lot more of this move from the 5th of April down to the lows from 12th of May. So looking to see if we can get back up towards the 200-period moving average, look to see if we can get up to this old swing low where we had this little balance area here. So the low from the 21st of April is my target at the moment, and that's the sort of the trade I'll be looking for this week ahead of the RBNZ rate hike. Okay, it's going to be slightly volatile week, I imagine, with all those data points coming out, especially with the pivot on Wednesday. Good luck today, and I'll speak again tomorrow.